Hey guys, today I want to talk about everyone's favorite topic from a year ago, cryptocurrency. So what happened to most people with the whole crypto boom back in 2017 is they didn't quite get in on it until the last half, especially when we started to go parabolic in November and December. And what happened was a lot of people bought into strength and then had no exit plan, no strategy, and basically lost all of their money in 2018. So I want to talk about a few tips and tricks that people can use to profitably trade these cryptos. Now, one of the things that I noticed when looking at the crypto price action is that the market's very trendy, and that's pretty obvious. We have those huge uptrends, those massive downtrends, and that's what you typically see in less mature markets. So in more mature markets like the US stock market or the US bond market, it's more efficient, so you don't see these huge, massive trends play out. But crypto's brand new. We have a lot of new players in this particular pool, so it tends to trend very, very hard. That makes it conducive to momentum and trend following strategies. Now, these types of strategies were developed back in the 70s and 80s when commodity futures trading was just coming up. And back in that time, the market was a little less efficient, and those commodities trended real hard. Soybeans, gold, oil, all sorts of stuff like that were trending because of high inflation rates. And a lot of the original market wizards made their millions using trend following strategies on these markets. Richard Dennis was someone that comes to mind, and he was the guy that pretty much developed and popularized trend following, and he created that turtle trading program, which was something that recruited a bunch of people who've never traded before. He gave them his trend following rules, and then they were able to become profitable. And so he used a very simple technique to basically get onto trends and monetize the move, and he turned something crazy from a couple $1,000 into millions before eventually retiring. So I think we can take a few lessons from what he did back in those days and apply it to crypto today. And I've developed a really simple system based off of his trend following principles that I call the 2010 system. And I'm going to show you guys exactly what it is. And then we're going to walk through the charts of Bitcoin and Ethereum from the end of 2017 into 2018, and look how that system would have performed versus buying and holding. Now, the trading rules are pretty simple. So for longs, we want to see the 20-day moving average above the 50-day moving average. And if that's true, then we just want to buy a 20-day high, put a 2 ATR stop on the trade, and then exit at a 10-day low. And for shorts, it's the exact opposite. So we want to see the 20-day moving average below the 50-day moving average. And when the crypto makes a new 20-day low, we get short, we put a 2 ATR stop on it, and then we exit on a 10-day high. So I'm going to run through that little algo with you guys on the charts here so you can see exactly what I'm talking about and how it would have performed during this whole boom bust in crypto. All right, guys, so here's a chart of Bitcoin. And what we can see here is if you bought it late last year in 2017, let's say around October, you basically had a gain of around 200%, and then you gave back all of those gains since then. So Bitcoin basically retraced the entire move here, and it's down back at 6,200. Now let's take a look at what you would have done if you used the 2010 system. So I have here all of the things that you need to enter and exits with the 20-day and 10-day highs and the associated MAs. But I'm going to turn these off so it's just easier to see what trades that the system spat out here. So we're going to start at that same time in mid-October, and here's a sequence of the trades that the system would have taken. So the first one was a long, and that was a 1.5 hour winner. The second one was a long, that was a pretty big 4.7 hour winner. The third one was a 0.6 hour winner, and that was a short. So that's when the Bitcoin first started breaking down. And then as volatility contracted, the system started doing a little bit worse. We had another short here that had a 0.7 hour loser. We had a long here that was a 1 hour loser. Here's another 0.8 hour loser. Then it had a break even 0.5 hour loser on trade 8. And then finally on trade 9, it had another full 1 hour loser to the short side. So if you tally all of those up, all those trades that we looked at the chart, you get about 4.7 R worth of winners to the long side, which when I refer to R, I mean risk units. So that could be 1%, 2%, 3% of your account, whatever your risk tolerance is. You got 4.7 times your bet at the end of it. But on the short side, you lost 1.9. So the shorts didn't work out in that boom bust process, but the longs did, and you still came out net ahead. So Bitcoin worked out pretty well, better than the buy and holders who just held, had a ton of profits, and then basically gave it all back by this time in 2018. Now let's check out Ethereum. Okay, so here's the chart of Ethereum, and let's just check out returns here real quick. If for buy and holders back in October, let's say they bought then before the big rise, basically they went up 350%. And they lost everything. They're actually now down 36%. So quite the ride for the buy and holders, and pretty brutal to get back all those gains and now be underwater. So here's the 2010 system on Ethereum, and let me take off all the indicators so it's a little bit easier to see again. And the first trade was a long trade back in November, and you got wicked out right here, but you still won 4.19R on that long. The next long ended up being a break even on these bad, nasty wick outs. And then on the short side, Ethereum actually did pretty well. So the system would have gotten short here on March and had a nice 3.2R winner. And then in trade number 4, would have gotten chopped up a little bit to the long side for a 1R loser. Trade 5 was a break even short. Trade 6, it's a little scrunch down here. Let me get it. Trade 6 was a 2.6R winner, and then the final trade, trade 7, was break even. So overall, pretty good on Ethereum. You made money both on the long side and the short side. So if I add up all those trades, it's about 3.2R units on the long side of which you gained, and 5.8 on the short side. Pretty amazing. So both sides were profitable on Ethereum for a total of 9R units. And that just goes to show you how much better using a simple trend following system can be on these cryptos when they go through these huge high volume, high attention, boom bust processes. So next time we get a bunch of volume and attention to the crypto space, consider using the 2010 simple trend following system that got many market wizards rich back in the day to your advantage for these new markets. Thanks for listening, guys, and I'll see you in the next video.